All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. We do have a signal here for the challenge today, but I'll go show it to you. I'm not going to make the trade, and I'll show you why. But it is Ford, and it's triggering bearish here today. And if we just look at the chart, you can see the downside 3-7 crossover action on it, series of lower lows. It does, or series of lower highs. It does have some higher lows in it, but it is triggering here and basically saying the odds of a 2 ATR move are pretty good. Well, the ATR on it's 19 cents. So, a run or a trend in Ford, a nice move would be 40 cents here, right? Now, keep that in mind, looking for a 40-cent move. And let's go take a look at the options. And if we come into the options and we go 30 days out, the spreads are really low, right? And that's fine. They're very low. But if we look at the delta and how much we can expect the option to change, it's not very good. Meaning, if we go with the 10 puts at $1.20, the most we can, expect these to go to is $1.60. And okay, yep, there's not a huge risk factor there with it. We're not talking about, something that, the option's going to go to zero. In fact, chances are really slim that happens. But it is something where, do I want to tie my money up for for essentially a 30% gain? Where if the trade performs exactly as I expect, we're looking at a 30% gain. If it doesn't, we're looking at a 20% loss. Is that worth tying cash up for? And for me, no. It just simply is not. I could come in and do the 9 puts, and the reward potential is a little bit better, but the risk potential is greater than the reward potential, which is not something that I want. So just from an options standpoint, just not very realistic here to go into trade. I looked at the weeklies, but by the time you pay the spreads on them and then look at the risk reward, it's even worse. So just not something I'm going to go and do here with Ford. So has a signal, but again, this is one of the stocks on the watch list. It's below $10, and anytime you're dealing with a stock that's below $10, it really just comes down to, is the option priced right? And if the option is priced right, then yeah, I can go for it. But with the option price the way it is, I just can't. I just simply can't go out and do that. So, going to forego that signal here. We've had a lot of signals here this challenge, right? It's not been a lack of signals. In fact, we talked about this on the 30-day summary. We are seeing a lot of signals in play. In fact, after 30 days, we saw 22 signals not traded. So you compare the first 30 days of last challenge where we had 16 signals to this challenge, we've had 29 signals. So we've had, 50%, 60% more signals here this challenge. But the way they've happened, we have not been able to trade them. Some of them due to earnings, most of them due to already being in position. So, it's just one of those. We'll see that, fluctuate. Right now it is, a little high on the signals not traded side. But we have had many more signals than usual here. And I expect that to continue to be the case going forward, and we'll go through lulls and ups and downs of number of signals. But I mentioned this morning I thought we could see a signal out of a Pepsi or a Procter and Gamble, and I'm probably not going to go into the close personally without a position on a Pepsi. I'll probably just take like a weekly flyer on it because I don't want to miss it if it goes. But doesn't have the challenge signal, doesn't have the crossover action on it here today. And that's the same with Procter and Gamble here, where it's just missing out. The 3-day moving average is still below the 7-day moving average, even though it is very close there. I just doesn't have it. So not able to go and trade those. We do have some downside crossovers out there, quite a few. We have Schlumberger, which I thought had a good chance of signaling, but consolidation risk on it's very high. We have a downside crossover on Netflix that's happening. Now, this is news driven. In fact, let me show you the chart. And I'm not going to pull up Netflix chart yet. I'm going to pull up Disney chart. Right, here's Disney's chart at basically 12 o'clock Eastern, and then you look at Netflix chart at the same time, and basically Netflix has fallen off $8, while Disney has rallied almost $10, right? And basically, it's Disney coming out with the first day numbers for their Disney Plus service, which we eclipsed 10 million, huge number there. Was one where when I was home last night with my wife and my daughter, we were just kind of sitting around chatting, and I pulled up my iPad and logged it or signed up for Disney Plus, and got it onto Katie's iPad. My daughter, she was so excited. It was like Christmas Day for her as she's just scrolling through all the content. One of the things that surprised me and was just the sheer volume of content that is there. It's not Netflix style, in terms of content, but it is a lot of content there, and so that is really helping Disney stock. Second pop in a row. We've had earnings, and now we have the first day of Disney Plus. But Netflix, and it's creating some sell action in Netflix, and I'm on the record as saying I think any positive for Disney is really a positive for Netflix long term. Right? I understand the short-term substitution element and the short-term concerns that come in, because I know the market doesn't look at it as, hey, a positive for Disney is a positive for Netflix. They look at them as competitors instead of, an industry that is taking out, Dish Network and DirecTV and the cable services. And it's just one of those where the more Disney Plus subscribers there are, the more people that are going to cut the cord on cable and DirecTV and Dish Network, and those people are going to go get Netflix, because it's a lot cheaper to have Disney, Netflix, and Hulu, or Disney, Netflix, and YouTube TV than it is to have some of the other elements or some of the other TV options that are out there right now. So long term, I believe it a very big positive, but again, granted, short term, we do get some pullbacks. I looked at Netflix on the pullback here. I'll wait for it to pull back a little bit more, wait for it to have some sort of upside action before evaluating getting back into it. But does have a 3-7 crossover, news driven, is not triggering bearish here today. But we see things like American Airlines, with the downside 3-7 crossover action, getting just a little bit of follow through. Delta is joining American here today with that same type of element. IBM joining here today as well with that same element. This morning we talked about the kind of just some of the market vibe breakdown action that we're starting to see. Nothing too serious. In fact, things are still in a bullish position. But we have seen more stocks move up above the 7-day moving average today than break down below it today. And last I looked, market was red. Yeah, so that's with the market a little bit red. And that is coming out of some of the consumer staples that have been weak, and the Procter and Gambles of the world that have been a little bit weaker and are starting to bounce a little bit out of the real estate sector here as well. So we're not seeing continued breakdown in this number today, and we do see the market vibe continuing to hold bullish, and sitting at a 5 right now, and it is borderline trigger neutral, but as it sits right now, is still in a bullish spot. Now, we did see a drop here in the market. Let me pull it up on S&P futures. We saw this drop right here from 30.96 down to 30.86, so about a 10-point drop in S&P futures on monster volume, over 40,000. And this is a report that the U.S. and China are not, or they're having a snag over agricultural purchases. My apologies there. So basically it's been we've heard this a lot. President Trump, when he's optimistic about China, he says, yeah, they're going to be buying soybeans, they're going to be buying all these agricultural products, and then time goes by and China really hasn't bought anything. And so we've seen this story play out many times here, but it is a report, I believe, out of the Wall Street Journal. Let me double check here. Yeah, out of the Wall Street Journal, that U.S. and China have hit a little bit of a snag over these uh, agricultural purchases. And if you look at something like a Caterpillar, right, it accounts for the drop in Caterpillar, right here, and Deere, same thing. But it's also one of those where this report 4 months ago would have dropped the market 40 points. It dropped the market 10 points, right? It really has not, grabbed the market in any real material way, at least so far. So we'll be interested to see how it, kind of, sorts itself on out here. But the breadth overall today, more bearish than bullish, but not enough to really change the metrics in any real material way there. Okay. All right. Last stock I'll take a look at is Visa. And Michelle forwarded me a question about Visa and the exit yesterday on Visa and why I would get out instead of just giving it a chance to work. And the bottom line is it just came down to it. It hit its automatic stop, time stop level for the challenge is what it hit. And if you want more kind of information on how that works, you can just come into the challenge spreadsheet up to the ATR method and just click on video discussion. It'll take you to the video where I talk about it. And what happens is when we have a stock that is triggered, right, for the algorithm, and it's gone 3 days without putting on gains, the odds of having a sharp pullback grow significantly. When we look at what's now almost 4 years worth of data, right, that 3-day period, if the stock is not putting in gains, it is just the odds change significantly. It doesn't mean Visa can't continue to go up and can't just fly higher after that 3-day period, but it's not what the odds dictate. And so it's one where, okay, move on out, go. Right now, if the stock does have gains after that 3-day period, the time stop is pushed out. Why? Because if it does have gains, the odds of those gains continuing is actually pretty high. So it's one where, yeah, it could reverse and could do anything, right? But, it's all based on the odds that are there and, just running with the odds. And it doesn't mean that, each and every position keeps up with the odds. But over a long period of time, the odds, they play on out. So, if you want to hold Visa and everything else, feel free. I'm just, running it with the challenge algorithm like I will continue to do. And, it's one where, yeah, it always stinks when, I get out and the stock rallies or something like that. And, I always get a comment made to me if I get out and the stock tanks. They're like, oh, glad we got out. I'm like, yeah, well, okay, yeah. But as far as any bearing on future direction, right now the algorithm doesn't really have anything, with that would make it something that I would step in and trade. Now, Visa did have a little action on it here today, and let me show it to you here on the minute chart as we see S&P futures recovering. But here on the minute chart, you can see Visa, the normal morning rally, right? We were in the position long enough to see it rally every morning and fade every afternoon. But basically, had this 2 minute hefty drop where fell from 179.75 to 177.90, so almost $2, which for Visa isn't all that big. But what was the news? It was something where Visa and Mastercard were. Let me see. I'll pull up the exact. Yeah, an FTC inquiry over debit card transactions. So, they're getting inquiries all the time. So it's not to me, nothing that's game changing here for it, or would make me bearish on Disney, or excuse me, on Visa in any way. With that stock. Okay. Alrighty. Well, thanks for hopping on. Have yourselves a fantastic evening. We'll talk to you tomorrow morning. Take care.